Stop panicking about Apple's $360 billion drop. Seriously. If you sold Apple on the 9% after hours crash, you might have just made a mistake. Here is the counterintuitive truth that every Apple investor needs to understand. Apple just reported a beat on everything, except guidance. Revenue hit $109.42 billion, up 16% year-over-year. EPS hit $2.02, up 29% year-over-year, beating $1.89 estimates. iPhone hit $54.25 billion, up 21.7%. Mac hit $10.35 billion, up 28.7%. Only services missed. But Q4 guidance was weak, 9 to 11% revenue growth versus Wall Street's 12%. Why? Memory and SoC constraints. Tim Cook's last call was a downer, not because demand is weak, but because supply is tight. AI is eating up the chip supply chain. Apple can't get enough parts. Let me break down the report, the drop, and the analyst reactions. I'll admit something. I saw Apple drop 9% and thought, this is bad. Really bad. Then I read the actual numbers. Revenue beat, EPS beat, iPhone beat, Mac beat, and I realized, the problem is supply, not demand. Today, I'm going to break down Apple's Q3 results. By the end, you will understand why this drop is exaggerated, and why the next 12 months could be a buying opportunity. Stay with me. Let's start with the actual results. Revenue, $109.42 billion, up 16% year-over-year. Analyst consensus was $108.88 billion, beat by roughly $540 million. EPS, $2.02, up 29% year-over-year. Analyst consensus was $1.89, beat by roughly 7%. Gross margins, 48%. iPhone, $54.25 billion, up 21.7%, beating estimates of $53.3 billion. Mac, $10.35 billion, up 28.7%, a big beat. Services, $30.74 billion, up 12.1%, but missed the $31.22 billion estimate. iPad, $7.22 billion, up 16.9%. Wearables, $7.56 billion, up 14%. The counterintuitive truth. Apple beat on revenue, EPS, iPhone, and Mac. Services was the only miss. Now let me show you why the stock dropped. Q4 guidance. Revenue growth of 9 to 11% versus Wall Street's 12%. iPhone growth in the mid-teens versus 17.6% expected. Gross margins of 47 to 48% due to memory cost pressure. Why the weakness? CEO Tim Cook cited memory and SoC constraints. Memory chips are in shortage because AI demand has consumed supply. Apple's own processors are also constrained. Everyone is fighting for the same capacity. The inventory angle. Previously, Apple had inventory buildups. Now supply is dwindling. Less flexibility, greater impact. The counterintuitive truth. This is a supply problem, not a demand problem. Apple can sell every phone they can make. They just can't make enough. Now let me talk about the stock. The drop, roughly 9% after hours. The loss, approximately $360 billion in market value. The context, this is Apple's worst day since March 2020. Pre-market price, roughly $301 from roughly $333. Why so severe? The weak guidance overshadowed the beat. Investors wanted assurance that supply issues would resolve. They didn't get it. The counterintuitive truth, $360 billion wiped out on a supply issue, not a demand issue. If demand were weakening, the drop would be justified. But demand is strong. Now let me show you what analysts are saying. Bullish. TD Cowen says buy with a $400 target. Goldman Sachs says buy with a $370 target. JP Morgan says overweight with a $340 target. B of A says buy with a $380 target. Hold. Needham says hold. GF Securities says hold after downgrading from buy. Bearish. Barclays says sell with a $245 target, the lowest on the street. The median target is roughly $321 to $330, and the current price is roughly $302. The counterintuitive truth: most analysts are still bullish on Apple. Even after the drop, the median target implies 7 to 10% upside from current levels. Now let me put this in perspective. Apple beat on revenue, beat on EPS, beat on iPhone, beat on Mac, only services missed. The guidance miss is due to supply constraints, not demand weakness. The market is punishing Apple for things outside its control. Let me leave you with the 3 secrets that connect everything we just discussed. Secret 1. The supply versus demand trap. Apple beat on everything except guidance. The guidance miss is supply related, not demand related. When supply improves, the stock will recover. Secret 2. The Tim Cook last call reality. This was Tim Cook's last earnings call. He gave downer news about SoC and memory constraints. But that's a transition issue, not a structural problem. Secret 3. The AI supply chain impact. AI is consuming chips that Apple needs. This is a short-term constraint. But it's a long-term tailwind. AI products will eventually require Apple's hardware. So what should you actually do with this information? If you own Apple stock, don't panic. The drop is based on supply, not demand. Watch for supply chain improvements. When memory and SoC constraints ease, the stock will recover. If you are a trader, the $301 level is key. If it holds, it could be a buying opportunity. If it breaks below $300, more downside could follow. If you are skeptical, Barclays sees $245. That's 18% downside from current levels. Wait for supply chain clarity before committing. Here is my question for you. Do you think Apple's supply constraints will ease in 2027, or will AI continue to eat up the chip supply chain? Drop your answer in the comments. I read every single one. Like and subscribe if you want more analysis on the biggest earnings reports of the year. I'll see you in the next video.